as somebody who sort of prides themselves in innovation, it's, does the world need a farmland fund? Well, yes, I think it does. And making these sort of parts of the private market space open, accessible in a way that's easy for, average investors to invest. This is the pursuit.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi, everyone. I'm Jason Balara, and this is the Know Your Why podcast. Today, I'm here with Kimberly Ann Flynn. She's the president of XA Investments, a partner in the firm and responsible for all product and business development activities. Kim, as I said, I do like to let you tell your story, and so I don't tend to go into a long, elaborate introduction. But first, I do want to say thank you for being here. Thank you for being on the show. Definitely excited to talk and kind of hear about your story and your background.
Thank you, Jason. A little bit about me. Let's see. I'm focused on running a business and growing my family. I've got 2 kids and a dog, and it's a busy sort of way of life. I've worked in asset management now for about 25 years, and I figured out early on that I needed to have sort of a niche, a focus in terms of my work and my expertise. And right now, it's benefited me because there's a lot of interest in alternative investments in private markets. And the business that I run, XA Investments, the A is for alternatives. And, that runs the gamut from private credit to private equity, infrastructure, real estate, farmland. So there's a lot of really interesting things to explore there as an investment professional. And, for me, I've sort of been focused on expanding as a product development expert, meaning helping asset managers get into the market, raise capital, explain what they do to investors. I've been focused on expanding sort of my area of knowledge and expertise across the capital markets. And after 25 years, I've been able to do that, which puts me in a good position to help others, help other asset managers. And our firm is unique in that way because we view other asset managers not as competition, but as, colleagues and clients. And it really allows us to have sort of a bigger impact because we're a fairly small firm. We're about 15 people, but because we help so many different asset managers and we help them solve problems, that really is a lot of fun. And I think at this point in my career, making sure you're having fun every day and adding value in the work that you do is really what drives you, to go to work and do the things that we do.
Yeah. That last part there, I definitely resonates with me a lot. When you talk about alternative investments, and that's definitely something that that term, and I've talked about this on the podcast before, but that term always kind of makes me chuckle in the sense that I feel like most of what are classified as alternative investments are like things we use every day, real estate, credit, debt, like things that actually happen every day. I know that the idea is to, sort of distinguish it from the public markets and stocks largely as far as, what people know. But it's interesting that space almost has a higher barrier to entry for people to be able to diversify. And you mentioned that you felt early on that you wanted to have a niche. And when you say that, I wanted you to kind of go in a little bit further on that and tell me, what do you mean by, do you mean a niche within alternative investing or just alternative investing as a whole, separating yourselves from stock investors? Like, What does that directly apply to you?
I guess with speaking to the niche point, to me, especially in a day of so much information at our fingertips now with AI use, it helps to be an expert in something very specific. And my expertise is in product development and structuring. Now that can apply across a lot of different asset categories. And so it's nice that the niche is something that can be broadly applied, but there are very few people who have the sort of knowledge in the area that I do, which is great because it right now it's in demand. One of my mentors at Nuveen Investments, where I sort of grew up in the asset management business, Bob Kuppenheimer, he said the same thing that you did about alternatives. He was like, nobody knows what that means. Like, what is it?
Right.
And it's like, I think people like to define it as anything that's not a stock or a bond. But now that U.S. companies are staying private longer, I think that the general public is becoming aware that they don't have access to SpaceX or XAI. There's parts of the investment world you can't buy a share in because these companies aren't public. So I think the public versus private equity is really one arena where a lot of Americans would say, yeah, why wouldn't I want access? Companies, are not going public the way they used to. This kind of stuff ebbs and flows in terms of IPOs and whatnot. But with the regulations, many companies have chosen to stay private to avoid some of the headaches and administrative burdens of being a public company. So, and that's just talking about public versus private equity. Think about real estate or infrastructure or farmland. I think many, especially people here in Illinois, I live in Chicago. Some of the best farmland in the world is here in Illinois, and a lot of individuals, they might have grown up on a farm, or maybe their grandparents owned farmland. So I think some of these tangible examples, owning real estate, owning farmland, makes the idea of investing in those areas a little bit easier to understand. That doesn't mean you can necessarily do it in a diversified way. You'd have to have millions and millions of dollars to be diversified investing in farmland or investing in infrastructure. So we're starting to see funds, things that are like mutual funds or ETFs, which everyone is familiar with. There are now SEC registered funds that allow you to buy infrastructure, real estate, farmland in a way that you couldn't 10 years ago. So I think that's really great for everybody that's curious about these parts of the capital markets.
Are you planning a remodel or construction project? Overwhelmed by the process? Over budget? Extended timelines? Strained relationships? We are all too familiar. At Lark Construction Services, we help homeowners and business owners take control of their construction journey, from reviewing bids and contracts to catching red flags before they become costly mistakes. Our Clarity Audit is a one-on-one expert review of your plans, estimates, or current progress, giving you the peace of mind and a defined action plan to move forward with confidence. Don't let confusion lead to costly errors. Visit larkconstruction.com and schedule your free call today. Lark Construction Services, saving you time, money, and stress.
Yeah, that really well said. It is when you speak to that diversification piece, you're really referring to the fact that essentially if someone comes to you and they invest with you through XA Investments, now instead of having to put millions of dollars into a singular asset, they can be diversified through your offerings. That's kind of just, I want to make sure the listener understands that and that I'm understanding it correctly.
Yes. I mean, the funds that we do manage are diversify, meaning you're investing in multiple securities by different issuers. We have 2 credit funds, 1 hedged equity fund, and this is typically required by the SEC for retail investors. They want to make sure that people have a diversified basket of securities. it could be any asset class, but diversification. Sometimes you might have more concentrated portfolios, but that gets disclosed in the risks. And I think that the notion of investing in single assets, having to have a lot of initial capital to buy like a piece of farmland. Plenty of people do that. I mean, a lot of homeowners, maybe they buy a second home to rent out for rental income.
Sure.
I think there's a lot of analogies here that make the idea of investing in diversified alternatives sort of, I view some of these like a rental property or a piece of farmland is sort of a gateway because it introduces investors in a way that's familiar to what we describe as more actively managed, professionally managed. You get to invest alongside institutional investors like endowments and pension funds in a collective pool. That may or may not interest you, but that is one way. It's like, I think a good example to help make this concrete is, infrastructure. You're talking about things like toll roads or airports. And a lot of infrastructure in the U.S. has been privatized such that it's not owned by government or municipalities. So these are really interesting long duration assets, long lived assets that kick off cash flow, right? So this is an interesting way to get cash flow, and it's diversified from a bond portfolio or other types of income investments that you have. And in the marketplace, we don't have an infrastructure fund, but I really like it because so many investors are concerned about inflation. Now with Trump tariffs, I think people continue to be concerned about inflation pressures. Infrastructure's the type of asset that benefits from an inflationary environment where prices go up. So 2-3 years ago, there were really not many investment options if you wanted to invest in infrastructure. Now there's some really interesting funds. The market leader in this market is a firm called Brookfield. They have quite a large diversified infrastructure fund, and there's 10 others that are really interesting as well that give investors access to hard assets, tangible assets, in a way that you can't find that in a mutual fund, and it wouldn't work in an exchange traded fund.
That's fascinating. I've never even heard anyone talk about that. When you talk about investing in infrastructure, and you mentioned an airport as an example, is that similar to if someone was investing in like a office building development, some real estate development? Is that kind of the same thing? Someone's building an airport or they're renovating an airport. There needs to be funds for that renovation. You could invest in that project and then you own a piece of the airport effectively. Is that how that works in that space?
Yes, I mean, there's a lot of good examples of diversified real estate. You could have real estate equity or real estate debt, to finance those types of projects. You could have commercial property in that real estate fund, or you could have residential property, because a lot of multifamily and rental properties are aggregated. There are a number of leading real estate managers in the marketplace. Blackstone has one of the largest real estate investment trusts that is diversified across property type. And you're right, like the thesis is very similar, which is you get income and you get maybe some additional total return potential. Now, real estate, I think, interestingly, at least commercial real estate post-COVID faced some headwinds because people were concerned about, return to work and whether or not people were going to be renting out office space. So office as a subsector of real estate, hasn't performed maybe as well as storage or warehouse facilities. And so there's always an opportunity as some of these market dynamics change for investors. And that's why you're kind of highlighting why I prefer actively managed funds, because I'm not going to know when to rotate from office property into warehouse property, but those experts are. And you're right. I think the objective doesn't change, which is deliver cash flow, deliver additional total return potential. And these types of real estate holdings, infrastructure is very similar. They are going to diversify away from U.S. large cap public equity exposure in terms of your overall portfolio. Many Americans are way over invested in U.S. public equities, partly because they're comfortable, I think, investing in stocks that they're familiar with, but the equity market can be volatile. We were reminded of that, recently, and after some of the changes that were made and some of the tariffs that were announced. But, we get reminded of that now, it seems like, because these markets are so volatile every couple years. And so I think some investors have the risk appetite to take on that volatility. But if you're retired, some of these other income producing investments like real estate, like infrastructure, may suit your risk tolerance better. And I think that's why we need to make these parts of the private markets more accessible, because endowments, pension funds have long had access, but individual investors saving for retirement have not.
That makes a lot of sense. Another question on the infrastructure side, I'm familiar with multifamily real estate. We have some self-storage, like that space. I understand the syndication space. With infrastructure, well, in most of these real estate syndications, a lot of the returns, especially lately, are realized on sale. I guess maybe I'm guessing incorrectly, but I'm guessing with infrastructure, where do the returns come from? If they're not, I don't know. I don't imagine that they just get sold. Is it more in a debt structure, or how do you see that working in those examples?
Yeah, I mean, so because we were talking about they deliver cash flow plus additional return, part of that cash flow is coming from, the fees from a toll road, for example, that
Okay.
revenue that's generated on a daily basis on a toll road. Maybe it's, the rents associated with a wind farm, because those wind farms are producing gigawatts and they're sold to the local electric companies. And so you're clipping coupons, if you will, in terms of the nature of the underlying businesses. But then sometimes those properties are sold and then there's a gain. So typically the investment, because it's a big deal to sell an airport, or toll roads aren't changing hands every 2 to 3 years. You have to be ready to invest in these assets for 10, 15, 20 years. Infrastructure investing is even longer lived than private equity, which might have more like a 10-year life. So that's why some of these evergreen funds, where Brookfield, let's go back to that example, they've built this evergreen vehicle that will live on. And that way, when new infrastructure assets are brought into the portfolio, they're cash flowing, maybe they're sold in the 10th year, maybe they're sold in the 20th year. It doesn't necessarily impact an investor's hold. You might want to buy the Brookfield infrastructure product and hold on to it for 3 or 4 years. Your investment horizon doesn't necessarily have to be the same. And so you have the flexibility to come in and out of that fund at net asset value. You don't have to wait like a private fund. If it's a 10-year private fund, you got to hold on to it for 10 years. So the advent of these evergreen funds that are now being sold into private wealth, it really gives the asset managers an opportunity to reinvest capital, redeploy capital, but it also allows investors to set their own time horizons and not be beholden to some sort of arbitrary 10-year term. And I think that dynamic is going to bring a whole new group of investors to evergreen funds because of that nature. Because, if you have a 20-year investment horizon, sure, you could put your money to work in private funds, but it's a little bit more flexible if you can come and go based on your own timetable.
Yeah, that I'm not sure. That's probably advanced investing advice here that some of the listeners may not even understand, but it is, you mentioned timetable. I mean, that's definitely one of the really important pieces of your investment strategy. How long do you plan to hold? How long do you plan to, or when do you plan to exit? What's the, the kind of point of that investment strategy? And we do want to look at things from a long-term hold, in general. You mentioned that your particular business is maybe geared more at supporting asset managers. And in what sense do you do that? How do you help them with their product and
We
making their
do.
investment?
So we have a research practice and we have a consulting practice, and our clients are asset managers. We serve both, traditional mutual fund asset managers. We also serve alternative investment managers, and the goal that they share is to bring their institutional investment expertise to the individual investor, and they have to do that with a product structure that the SEC is comfortable with, and frankly, that works for individual investors, meaning mutual funds, ETFs. People are familiar with those. They produce 1099s for tax purposes, and there's a comfort level, investing in those types of SEC registered products. And some of these evergreen funds, interval funds, tender offer funds, are types of SEC registered products, and that's what we advise these alternative asset managers and traditional asset managers, how to make their strategies work in these sort of new innovative product structures. And we also help them think about the trade-offs, because sometimes these things don't fit neatly. If you're trying to build an infrastructure fund, you have to think, well, how is that going to work? Because a lot of these managers are accustomed to running private funds, and running an evergreen fund for individual investors basically requires changes in terms of operations, marketing, things of that nature. And so that's always been our focus. And so we're able to help them get ready to go to market. And there's so much demand right now for evergreen products, and there's demand from advisors. There's demand from 401k providers. And so there's a lot of energy right now around these types of new product development initiatives. And that's what we're helping our asset management clients do.
Yeah, I think that's very, very needed. And it's changing to an evergreen fund structure it just makes the math, I think at its most simple level, makes the math a lot harder to kind of project returns, calculate returns, really imagine where someone, essentially where they are in the life cycle of that. So I think being able to support these funds and provide structure around that is super important. I mean, I think when you have, even if you have a closed-end fund, it's even, you may have investors enter at different times. Even that gets a little bit confusing, I think, to people, especially that are maybe new to the space, new to investing in the space. It's like, oh, well, because I get the questions from potential investors around our fund, and it's like, well, if people invested a year ago, what happens now when I invest, or the people that invest a year, what happens when you take on new investors? And it is a hard thing to describe. And so providing support and helping those fund managers understand and be able to present to their investors, because I don't find that question easy to answer, even when my investors, and I don't have an evergreen fund, so it's kind of like I can only imagine that gets more and more complex, as you add those layers of time.
Yeah, I mean, one of the things that is hard is valuation, because how do you value a toll road or an airport on a daily basis? That's because the asset's not being sold. So how do you value it? And so we do spend a lot of time working on valuation policies and procedures, because if new investors are coming in every day, you need a daily net asset value, and the value needs to be thought to be fair or proven to be fair, and that's why there are valuation firms, there are audit firms. There's a whole process to make sure that your valuation policies and procedures are as they should be, because you can't let new people in unless there's sort of confidence around the valuation. But I think it's a good point, because that's actually what happened a few years ago with some of the real estate investment trusts, because people weren't confident about the value, like what is the value of commercial real estate in the US. And sometimes it takes time for that to be agreed upon, right? For
Sure.
everyone to sort of agree where value is. But absolutely, if investors are coming in at different entry points, you have to get that valuation process right.
Yeah, and you mentioned volatility within the stock market, and then a large, some people I think look at the long hold times around real estate as a negative, that it's an illiquid asset, and infrastructure I would say would be the same thing. You're saying even longer hold times on those.
Mm-hmm.
When those things that are not supposed to be volatile feel volatile, I'm
Mm-hmm.
sure that makes it even harder. And if you have to assign a value to it daily, I
Mm-hmm.
mean, yeah, I can only imagine the complexity that gets involved there, and what your company is providing for people trying to navigate those conversations with their investors, and understanding themselves has got to be, incredibly important. What AI is a big topic. What kind of role does that, if any, play in your business?
Well, we use it right now in our research process, because, there's about 290 funds in the evergreen SEC registered market that we're tracking, and it's growing by about 50 funds a year. And so we use it to enhance the data and the analysis, because our clients are asset managers. They're trying to get their arms around who are our competitors and how well are we doing relative to them. And so we are using some applications of AI to help us with that. We also do another application that anybody could, use, to the extent you do social media, or you're doing, we talk with reporters quite a bit about the research that we do. And, if you're quoted in a news article, or if you want to post or share a news article, a lot of these publications are behind paywalls, so you can't do that. So we'll use AI to create an article summary, and that way we can share the research that we've shared with the reporters with a broader audience. So that's one, like, that used to take analysts on my team a couple hours, and now they can do it in 5 minutes. So I love those little sort of applications. AI is, my firm is actually part of an investment bank. They focus on M&A. They have an expertise in the blockchain. They have an expertise in fintech, and AI is sort of a big part of their fintech practice. So my bosses, who run the investment bank, are very focused on embracing AI. I would say it's probably early. We do hear from asset management clients that we work with how they're using AI in their own investment selection, stock selection processes. Usually it's to refine an existing investment process. It's not being used as a substitute just yet. But I think some of the hedge fund clients that we've worked with, they are a lot more sophisticated in terms of some of the data analysis that they've been doing to analyze trends in the market. And so now they're using AI to be able to do some of that faster. So, but I do know even in we're seeing in asset management the impact of AI, especially on some of these early analyst research roles, because there has been a slowdown in hiring of some of these young people right out of college, because that work is now being being done by some of these AI tools. So I think there's sort of upsides of AI, and we've seen some marginal pickup and benefit in our own business. We're hearing more about it. I would say that the panel circuits at all the conferences are talking about it theoretically, but I like some more of these tangible use cases. And I was, just emailing my manager today about one dimension of private credit that we get asked about all the time is, can you rank funds by distribution yield? Like, what's the yield that that investment pays? And and we can do that, but that's a good statistic. That's an example of, it's not something that's in the SEC required annual report, for example. But managers, people will put it on their fund fact sheets, or they'll put it on their website, because if you're buying a private credit fund, you want to know what the current yield is, right? Some of these direct lending funds, for example, they pay out 11 or 12%. So we're going to use AI to aggregate some of that optional disclosure language, because the SEC doesn't require you to disclose your current yield. But in marketing a private credit fund, it's helpful to know, is my current yield competitive with, my peer funds? So that's one good example.
Yeah, that's fantastic that you can use it for that. It makes me wonder. I mean, I wonder what the future holds in a lot of this with AI use, and specifically how it relates to investments. I imagine, and I've had other guests talk about using AI in their investment strategies in different ways. What you just mentioned is another way I hadn't heard of before, but it'll be interesting to see, I don't know if it'll be 5 years, 10 years, whatever, when everybody is using AI as part of their evaluation of investment strategies. Like, are we going to be better at investing? We're all just going to be doing the same thing. Like, what exactly is that going to look like? It's like you would think that level of, I guess, technology may make it better, but if everybody's using it, then it's almost like I don't know, this weird circular thing that I'm kind of not sure how that's going to end up at the end of the day. Like, if we're all using this technology to pick stocks or alternative assets or whatever it is, where to invest our money, then likely what's going to happen is it's going to be telling us the same thing. And so everybody, it's going to be hard to, then we'll shift back to people who can be more innovative and think outside of that, specific algorithm. So it'll be interesting. It'll be interesting to see. But it sounds like, you've got a good mix of, integrating that technology, but also just analyst and sort of human input on some of these recommendations.
Yeah, I mean, I think it's like, to your point, you have to maintain your edge, because if you're not experimenting with AI or trying to employ it, and other people are, you're just going to get behind. And so there was an interesting article in Newsweek just today talking about most businesses are reporting some expense savings from AI, but they're not reporting top line revenue growth yet from AI. So I think it's still early, right, in terms of the applications and use cases. But yeah, I mean, I think it's hard to deny that this is going to be. I was out in San Francisco this weekend with my daughter, and every billboard on Highway 101 was an AI billboard. And at first I thought to myself, and I'd never heard of any of these AI tools or companies. And I said to my daughter, who's 15, I was like, who are they marketing to? And I was like, it must be that they're marketing to the nerds. Like, they're trying to recruit as people drive, right? It's not for me,
right.
But it's a recruiting tool. Because I was like, this is so strange, because you didn't learn anything about the business, but yeah. So I think it's fascinating. We'll see a lot more of it. In Chicago, there's no billboards on AI just yet. I mean, maybe they are, but you don't see them.
It's technology is just changing so fast too now, and I think that velocity keeps picking up. So it'll be really interesting to see, kind of where it goes over time and how it applies to I, I don't know, but I think the use cases are different in alternative investing versus stock, you know, publicly traded stock market type of thing. It just the way that those returns happen, or the way that those returns are um, calculated and paid out, and all of that. I mean, I think it's just a kind of it'll probably be different tracks a little bit there, but we'll see. We'll see what happens. It's definitely an interesting time.
Well, I mean, one application that that would be interesting with private markets, just take companies staying private longer. Part of what's challenging with the private company is they're not doing quarterly reporting. So discovery of information on those companies is harder. So there are AI applications, I think, to provide more
Mm.
transparency, where, some of these private companies are huge, in terms
Yeah.
of billions of dollars of revenue. So, and they have tons of employees. So I think AI will also help, sort of shine a spotlight on some of these private companies, especially now that we have these investment funds that allow access to those private companies. So that'll be really helpful, not just for the investors, but for advisors. As we try to explain this to our clients, right? I think plenty of these private companies, up until recently, it's really hard, and that's why those private equity shops are good at digging around and finding this information. But with AI, you have a leg up that maybe you didn't before.
Yeah. Yeah. Makes total sense. Well, Kim, I want to switch gears here. I want to ask you a couple questions that I ask every guest, and the first one is related to the name of the show being Know Your Why. I always love to hear, kind of what your why is, what drives you, what kind of keeps you moving forward. You mentioned two kids and a dog, so that's often family is a part of it, but I'd love to hear kind of, what really motivates you.
Well, so, I think for us, it's always about opening up um, access to things and making, creating another equity ETF. The world doesn't really need that. So, as somebody who sort of prides themselves in innovation, it's, does the world need a farmland fund? Well, yes, I think it does. And making these sort of parts of the private market space open, accessible in a way that's easy for average investors to invest. This is the pursuit. It's the reason for our business, XA Investments. And for 5 or 6 years, we were pursuing it with no company, because we thought, well, this is really where things are headed. It's just been in the last 2 or 3 years that everyone else has sort of decided, hopped on that bandwagon.
Mhm.
And there's real macro reasons for this, which is, the burden for saving for retirement, is on your shoulders. It's on my shoulders. We don't have corporate pensions anymore. And so individual investors do need these opportunities. And it's really going to be, you can't count on Social Security. You don't have a pension. And so that's why we're starting to see, Trump signed an executive order last week to open up 401ks to crypto, to alternatives. And so now that we have an SEC that's open to making private markets more accessible, we've got a lot more people on our side promoting the type of innovation that we're seeing in the market. So this is what drives us. It's a lot of fun, and we get to share what we know with other asset managers, which is fun. So I mean, we're sort of free agents. I like a lot of my clients. I don't like all of them, but then again, I don't have to work there, right?
Yeah.
And that's really the fun is in solving some of these interesting problems to make private market investments more easy to access for everyone. So that's what drives us, and we're having a lot of fun doing it. And yes, for any dog owners and parents out there, I do spend more time on the dog right now than I do on the two teenagers. But yeah, it's funny because my son, who's 18, just opened up a LinkedIn page for the first time, and now I have him following me on LinkedIn, which is a little scary, but
Yeah.
but that also can motivate you to be thoughtful about what you post on social media. So
Right. Well, the scarier thing might be following him back and finding out what
yeah,
what an
right.
18-year-old is posting on LinkedIn. So that's great. That's great. When people hear this and they want to connect with you, what's the best way for them to find you? It sounds like LinkedIn is an option, but how would people best reach you?
Yes, follow me or XA Investments on LinkedIn. We do post daily observations on the evergreen interval fund market. So if you're curious, go there. On our website, xainvestments.com, we have a whole knowledge bank with white papers, other educational resources. We actually launched an interval fund index to try to bring transparency to this part of the market. You can find that information on our website as well.
Amazing. Well, we'll get all of that in the show notes so people can find you. Well, thank you so much for everything you shared today. This has been certainly a unique conversation. Some of this stuff, I think your company is I've not heard of anything, anybody in this space doing what you're doing, and I think I don't know if we'll see how big the shift is, but yeah, I think the access to alternative investments is extremely important for to open that up and allow people to have options and to be able to invest in their future in whatever way they see fit. So thank you so much for being on the show. Thank you for sharing all that you did. I truly appreciate it.
Thank you, Jason. I appreciate it too.
And folks listening, make sure you connect with Kim, and please like, rate, and review the show so we can continue to get more great guests. As always, thank you all for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?